Hello, everybody. Here we are. It is Thursday. We're almost there. We're almost there to the end of the week here, guys. Got through another big eco data event this morning, CPI. And you know what? Market hanging in there pretty good. The results of CPI was that even though inflation is still coming down, the results were a little bit hotter than expected. So that's why we're seeing right now S&Ps are actually down about 10 points. They actually just ticked positive a short while ago. They had been down as much as 20 points earlier. So what all of this does is really affect or go into the decision making of what the Fed is thinking. What are they going to do about the next potential rate cut at their November meeting? So after they did the 50 bip cut a few weeks ago, market was pricing in, boy, it's 50-50 chance of another 50 basis point cut at the November meeting. But now look how that has changed, and I know we kind of seem to look at this on a daily basis here. Okay, here are the probabilities. So 50 basis points is completely off the table at this point. Right now, there's about a 15% chance, probability, that there's no cut at all, and an 85% of just a 25 basis point cut. So right now, the markets are not even thinking about a 50 basis point cut whatsoever. Okay, so with the CPI data that came out this morning, is that a good thing, bad thing? Well, for the markets overall, it's probably a good thing. Right, we all want to see those lower rates, but those lower rates don't just come in a nice wrapped up package like everybody thought was going to happen just a few weeks ago, where we were going to get a 50 basis point cut, another one, continuing. It just goes to show that the eco data we're getting really can change. So the expectation of anything here, guys, that's what makes us as traders have to be flexible and have to be able to be actionary rather than reactionary, because things can change so quickly. Does that make sense to everybody? And hello to everybody. Hopefully you can hear and see me okay. All right. Bobby, how you doing? Welcome back. All right, that is good stuff. So again, real quick, market down about 8 points. SPOs are down about 8 points today. The Nasdaq made a huge reversal. The Nasdaq was down really big this morning. In fact, I'll bring that up here. I think at one point the Nasdaq was down about 1% this morning, and it's now ticked positive. It's ticked positive because we're seeing a lot of the cyber stocks really supportive. Lots of buying coming in there. See, the low on the day on the Nasdaq today was 18,154. Yeah, so down about 1%, and now we're unchanged. And the Dow is now down about 100 points or so, and this is what I'm going to focus on when we talk about what I had put out in the heading for what the topic was going to be today is, can the market continue to rally? So at a low today, the Dow was down about 50 points lower than we are right now. Not a big deal. But check this graph out up here, guys. This is the Dow. This is a 1-year chart of the Dow. That is about, as positive and, as not even so much grinding, but just stair-stepping its way up a chart as you could see. Okay. Look at that. Okay. Yesterday's winner, we weren't sure if you were here at the end of the day, which you were. Okay. But if you're going to be in the spinning wheel contest, yes, stay till the end of the live stream. Okay. And I see a bunch of you already ahead of us asking, yep, you just put your name up there, me, and we'll get you in the spinning wheel today. Okay. Now, what I want to talk about before before I talk about the Dow here, is real quickly something with the VIX. Okay, and I'm going to bring in here current market data on the VIX here. And this shows the difference in VIX futures. So the October futures, you can see 21.45, and then that drops. Then that drops, pretty considerably, 10% or so. Does anybody know why that is? Why is the October future, okay, and it has been this way. This is not a new anomaly, but I really just kind of want to explain it. Why is the October future much higher than the subsequent ones, which are after the election? Okay, the reason is, what is the VIX based off of? The VIX is based off of options that are priced 30 days forward. Well, when is 30 days forward from the October expiration? November 15th. November 15th already encompasses the election. And typically what we see, right, just like what we see going into a stock earnings, exactly, is uncertainty, Thomas. Okay, just like any event, right, where there's the perception of a bigger move, that adds volatility to the marketplace. So the options that affect the October VIX futures are the ones that are going to get impacted most by the election. Okay? Now, is that going to flatten out? It absolutely should, because elections really don't cause a lot of volatility, though we did see that back in 2016. If you guys remember, when the first polls came out, or the first results came out that Trump had won, or that it was looking like Trump had won, the market cratered and then rallied all the way back. And we've talked about what happens in different scenarios with the election and who wins the White House and who wins Congress, and that the market doesn't really care. It doesn't really affect the marketplace. The only thing that really does is if there's a clean sweep of the White House, the House of Representatives, and the Senate. Then there can be an outlier move. Okay, does everybody understand that about the VIX and how those prices are calculated? Okay, good. Now let's get back to the Dow. Okay, here is a 1-year chart of the Dow. Pretty darn impressive. Okay, and we know what these dips are. Okay, this big sell-off here, that was August 5th with the Japanese yen carry issue. This right here was back in April when we had a significant drawdown in the market. But boy, look at this right here. You talk about a pattern of higher lows and higher highs. Until this pattern is broken, we are in a buy the dip marketplace. If something happens and we see the Dow, come down here, man, oh man. Let me clear that and draw a new line here. Okay, if I were to kind of extrapolate this out, right around here would be your buy point. And, we could do obviously more detailed calculation on that, but that would really be your buy point based on this buy the dip, higher lows, higher highs. Does everybody see that? Okay, now, besides looking at this chart here, besides looking at this chart and saying, boy, does this look really, really bullish here. Okay, and by the way, if we go back to a 2-year chart, this is a 2-year chart right here, and they're talking about this on all of the networks. If you watch CNBC, Fox Business, Bloomberg, whatever it is, right here, bottom of the market, 2 years almost to the date. That was October 13th, 2022. So tomorrow is the last trading day for that 2-year cycle, and it'll be 2 years of this bull run. What do we make of that? Not much. It's good fodder for talk, good headlines for the networks. Okay, but just want to point that out in case you happen to see that. 2 years for the bull run. Okay, now back to what we were going to talk about here. Okay, let me give you some stats here. These are really, actually, some very impressive stats. Okay, out of the last 250 trading days, which is basically 1 year. I think there's 260 trading days or 262 trading days in a year. So out of the last 250 trading days, the Dow has risen 152 of them. Okay, that's basically just over 60% of the time. There's only 2 other times in history that has happened. Only 2 other times in history where we've seen that kind of consistency. Okay, one was in April of 2010. The other one was in May of 2018. Okay. Yeah, smooth sailing. I think I just need to actually close the windows behind me. But you don't need to see me. You just need to hear me and listen and see what I'm putting up on the board here. Okay? Now, in both those instances, it wasn't a straight line up. We saw a choppy trade just like we are seeing right now. Choppy trade is the earmark, the benchmark of what we see in the markets and kind of what we like. We don't like straight lines in one way or the other. We don't like straight lines. Okay? Now, in that same time frame, we've seen the Dow gain just about the same 60% of the time on a weekly basis. Okay, so whether it's on a day-to-day, a weekly, we would expect those to be in line, and they are. Okay, now, in the past 5 years, okay, the market is up 63% of the time on a monthly basis over the last 5 years. Okay, now that's not actually so extreme. That is not actually so extreme. That average is a little bit better than 50%. It's about 52, 53%. So, yeah, maybe it's getting a little bit frothy, but it's not that out of the realm of historical performance. So what that is showing us all here, because we looked at a daily basis, we showed a weekly basis, we showed a monthly basis, okay? That is really consistent momentum to the upside. That is really consistent momentum. Okay, so is that going to continue? There's no reason it shouldn't. Could there be a black swan event? Of course, there's always a risk of a black swan event. But given the landscape, given the economic backdrop here, things actually look pretty good. Now, we do have earnings season that just started, right? So we have to take that into consideration and see how earnings season comes out. But remember, we can't just look at the day to day or the week to week or the month to month, right? We have to look at that longer time frame to get those patterns. Okay, let me put up a couple of charts here that I want to show you, and I can actually share these with you if you would like them. Let me view, let's zoom here. There we go. That might be a little too much. Zoom. Sorry, guys. Okay, here we go. So here is a chart that details what I just laid out here. Daily, weekly, monthly, yearly time frames. And again, I'm happy to share this. Hey, Brian, how are you, man? I'm happy to share this with anybody afterwards if you would like. So we've got that. Then we also, here's the S&P, which basically replicates what we saw with the Dow. This is a year-to-date S&P. So one is, the beta of the Dow to the S&P over a period of time, the longer period of time, it has a very, very close correlation. Everybody see that? So, what I wanted to the reason I brought this up today is because, there's all this rhetoric talk that you'll hear and see on CNBC, Bloomberg, whatever it is about, boy, the market's really frothy, valuations are kind of getting out of control here, what is going on? And just based on history, we don't know what's going to happen on a day-to-day basis, but the market is really set up to continue the chop, but continue higher. Does that make sense to everybody? Okay, what I'd like to go through next, is a breakdown of a position that we have on. And we just did this in our room, so if you guys were in the room and you listened through the position, just forgive me here. But the reason I'm bringing this up is to show you how dynamic options are and how when options are really liquid, which are the options that we're trading, we're always trading in big names that have a lot of volume and a lot of liquidity, how we don't always have to be stuck with a position. Options give you options. Options give you flexibility and the way that we could potentially change things around. Okay, so MPC is what I have up on the board here. And if we look at this chart in MPC, and I think we talked about this maybe on Friday or Monday earlier this week, but if we look at MPC on this chart here, can everybody see, everybody see this area of support? It's not a 50-day moving average. It's not a 200-day moving average. It is just a massive area of support. Let me get a different chart here to bring up that might be a little bit more representative. Hang on one sec. Let's bring this up here. Okay, this is now my Thinkorswim. And look at that area right here. Okay, everybody see that area right there where, boy, 158 or so. Okay, man, what a floor of support that put in. 1, 2, 3 times here. Well, that's where we got in when MPC nosedived earlier in the week. Okay, so what this goes to show you is there's a gazillion different indicators you can use out there. We focus, a lot on the moving averages, RSI, but there's a lot of other indicators that we have to look at. So that was the impetus for us getting in a bullish position. Okay, bullish position meaning, let me take this off here and go back to my other screen here. Okay, bullish position meaning positive delta. Everybody understand that? Positive delta. Okay, now, as we always talk about, and I know we did this earlier also, okay, the best sort of trade that we could make is when we have a clear-cut inkling, using whatever technicals we're using, of combining direction or delta with volatility. Okay? With volatility. And in the case of MPC, the implied volatility, the option volatility, option premium here, kind of through the roof. Right here. Volatility exploded. Option premium got really expensive. So when we're identifying that, we want to get a position with positive delta, and we don't want to be long volatility. We want to be short it, because based on historical performance, this certainly looks like volatility in MPC is coming down. And maybe it's not going to come down, but it just based on what we have seen in the past, it looks like it's not going to move higher. So how do we put together a position that gets us to long delta, short volatility? Well, as you know, those of you that have participated in it, we put on a short butterfly spread, a short broken wing butterfly spread, where we actually collected a $2 credit. So we did this for a $2 credit, positive delta, negative vega. Okay, looking for the stock to move higher, volatility to come down. 2 days after we put the position on, we took off half of the position. We paid $1. Okay, remember, we collected 2 up front, took half the position off, paid $1, made $1 on half our position. Great. Okay, we'll take that in 2 days. Now, stock continued to rally further. And let me get the stock up here. Okay, stock, here we are right here. You can see this big rally. Here's where we got in, guys, literally 2 days ago. Literally 2 days ago. Look at this rally. So it wouldn't be a good risk management situation if we didn't do something to protect our profits. And here is where the flexibility of using options come in. Okay, here's where the flexibility of using options come in. Yes, we could have absolutely just taken off the remainder of our position here, which is now trading down to 40 or 45 cents, and just say, great trade, we're out. Rather than doing that, because there's still a whole nother week. If these were options that expired tomorrow, we may have done that. There's a whole nother week here. What we did is we adjusted our position. So rather than having this broken wing meaning that the distance between the long and the short strikes are not equivalent, which you can see here, we were long a $2.50 wide put spread, but we were short a $7.50 wide put spread. So the risk we were taking, because we wanted to have that long delta, is if MPC kept going down, this would not have been a good position. Now with this big rally, what did we do today, folks? And those of you who are in option volatility, you know. What we did is we rolled. We bought back our short 162.5 puts and sold the 160 put. So what we did was take that risk completely off the table, because now we have what is known as a regular or symmetrical butterfly spread. Symmetrical meaning that we have a long $5 wide put spread and a short $5 wide put spread. Does everybody see that? And we have that for a credit. Normally when you put on a butterfly position, call, put, regardless of expiration, you're paying for that position to buy a butterfly. We now have a butterfly and we have a credit, meaning that wherever the stock goes, whether it continues to rally and expires above 165, or if it falls out of bed and expires below 155, not only can we not lose, we have locked in profits on the position. And if it does just kind of sit in this range, which is what we ideally want to happen, in fact, we'd love to see it pull back to where? To the short strike. That would be ideal. This thing could actually explode in value. So the reason I'm bringing this up, guys, is to let you know, once you get going trading, this is not necessarily a trade for beginners, although if you just kind of follow the instructions that we put out, you can do it. But once you get, a little more nuanced, boy, the flexibility that options give you is absolutely incredible. Okay, and the fact that we can now be in this position and not only not have any risk at all, literally not have any risk at all, but also have locked in a profit, we'll take that every time. Take that every time. All right, guys, getting to that time again here. Market is pretty much unchanged from where we started. S&Ps are down about 6 points or so. Not a heck of a lot going on. Any questions from anybody? I know we put out the last call for the wheel today. Any questions about a stock you may want to look at? I know there's a lot coming up with earnings starting, banks especially now. Quick question, Motown guy, what you got for us? What's your quick question? Nike, okay. Nike and Lulu, those are the two we're going to look at. Okay, let's take a look at Nike. We had that position on. The stock really sold off, which is what we wanted to happen here. We had put that position on here, sold off to here, and you know what? It bounced off the $80 mark, which is the 50-day moving average. I probably wouldn't do anything right here, but if it came back down to that 50-day moving average area, which is right at 81 actually, that's where I'd probably be interested in it. Okay, Lulu. I was on Charles Schwab Network the other day talking about Lulu, that I liked Lulu a lot. I think we had a November upside position out that we had talked about, looking for a breakout up to that 300 area. I still stand with that. I think there's definitely way more upside potential to Lulu than there is downside. Last one I'm going to do here is the fall in AMD tradable. Well, anything's tradable, but let's take a look at the charts here. There was definitely some news out today in AMD causing this. Okay, about their processor. Okay, they had an AI event, and whatever they have said today in their big event, the market's not liking it. So as soon as this populates here, let's take a look at the charts and then we will go to the wheel. Okay, here's AMD. We're getting very close to the 200-day moving average, which is at 162. That's the mark I'd be looking for. And yes, I think it is tradable. That's the entry area I'd be looking for. Motown guy, what position exactly are you talking about? You should never have to do them one by one. That's why we trade spreads. But I don't know which position you're talking about. I know you want to sell a call and buy back a call. Are you talking about Motown guy in the position in the other room? You should always enter as a spread. You should always be able to enter as a spread. So for instance, okay, here's a sample position. Okay, here's a position that we have in one of our other rooms. It's just a call spread. Long the 165, short the 172 and a half. If I want to sell that out, which we did half of that this morning already, Schwab definitely has it, Motown. All I've got to do is click on MPC, create closing order, and it automatically populates. Now, maybe, and I don't know this, maybe you are not approved to trade spreads, but that functionality is 100% there. You should talk to Schwab about that. All right, guys, that's going to wrap us up. Let's get to the wheel here, everybody. All righty. Today's like I said, Motown, you've got to talk to Schwab about that. It's not just think or swim. Every platform has that functionality. Okay, you've got to talk to Schwab about it. Okay, here we go. Today, is it going to be Allen or Leaf? It is going to be Allen BCTX. Allen, don't know who Allen BCTX is. But, as always, shoot us an email. Right there. Shoot us an email with your name, mailing address, and your size. And we will get you out that swag. Okay, everybody. Tonight, I am actually doing a live webinar tonight. I'm going to put a link up here. That webinar starts at 7 p.m. Central Time. Okay. Yeah, the game is definitely rigged when there's, you have a 2 or 3% chance. Hang on one second, guys. I want to put the link to tonight. Looks like, hang on, I'll actually take another question here. I know somebody wanted to look at Palantir, I think. So while I'm waiting for that link, one of my dogs is, come on, guys. There. You gotta stop that, buddy. Okay, all right. All right, sorry about that, guys. Okay, let's take a look at Palantir here. Brian, you want the link to what? Brian, what do you want the link to for tonight? I'm getting it here, guys. I'm searching for it here. Okay. I'm going to give you the link. Mike Shore is doing one tonight also. Here's the one for Mike Shore. All right. Palantir, guys. I mean, it's off to the races. What do you say about this stock? I mean, it's all-time highs. Can it keep going? Sure. I'd be pretty cautious here about Palantir. I mean, there's a lot of FOMO behind it right now. All right, there we go. Okay. I think that is the link for me tonight. So there you go, guys. We'll post them up again. Brian, I understand. I'm waiting for that link. I'm just having a little problem here. Okay, there we go. I found it. Here we go. Here is the link. This one is for me tonight. Right there. Okay. All right, everybody. Really appreciate you tuning in today. Look forward to seeing you guys tomorrow. Have a great day, everybody.